We are covering these 7 top stocks with big percentage gains today. While watching bullish price actions, let us inform you our review on MYSZ. MYSZ Incorporated, formerly known as Knowledge Tree Ventures, is an Israeli company that's making waves in the online shopping world with its innovative solutions for both consumers and retailers. They're primarily known for MYSZ, a tool that lets shoppers create a personalized profile of their body measurements, helping them find the perfect fit when buying clothes online. This is a big deal because it cuts down on returns, which are a major headache for e-commerce stores. They've also developed other cool products like Size Up, a smart tool that allows you to measure flat surfaces using your smartphone, and a few other solutions for in-store shopping and cross-site searches. Essentially, MYSZ is helping to make online shopping more accurate, convenient, and tailored to the individual. Now, let's dive into the company's recent news. Their stock shot up 42% today, and that's definitely catching attention. Why the jump? Well, MYSZ reported its fiscal year 2024 results, and while they're still posting a net loss of about $4 million, there's a lot to be optimistic about. Revenue grew by 18% compared to the previous year, bringing in over $8 million. The bump in revenue is largely thanks to their acquisition of Orgad, an omni-channel e-commerce platform that's been driving sales, particularly on Amazon. That acquisition, along with the recent addition of MYSZ, a technology focused on improving sizing in the fashion industry, has expanded their product offerings and customer base. They've also been able to reduce costs, which is always a good sign. Sales and marketing expenses were down by about 19%, and general administrative costs were also trimmed by 15%. That means the company is getting more efficient with its spending, which could help improve profitability in the long run. But here's where it gets tricky. MYSZ still has some serious liquidity challenges. Their cash position is better than it was at the end of 2023, but they're still burning through cash, especially with their plans to grow and invest in the integration of their acquisitions. The company has acknowledged that it will likely need to raise additional capital soon, and that could be a tough pill to swallow. It's unclear whether they'll be able to secure that funding on favorable terms, and raising money could mean diluting current shareholders, which is something investors will need to keep an eye on. Still, if MYSZ can successfully navigate these hurdles and continue to integrate and scale its business, there's potential for growth. In the short term, the 42% jump in stock price is a positive sign, and it reflects investors' optimism around the company's growing revenue and new product offerings. But there's a big if attached to that. MYSZ needs to manage its cash flow effectively, execute on its growth strategy, and secure that necessary capital to stay afloat. If they pull it off, there's definitely potential here, but like any early-stage company, there are risks involved. So, to sum it up, MYSZ is making strides with its acquisitions and growing its customer base, but it still faces challenges with funding and profitability. If they can keep the momentum going and address their liquidity concerns, today's big jump in stock price could be a sign of good things to come. Keep an eye on how they manage their cash and the integration of their acquisitions, as that will be key to their long-term success. Our review on LXEH LiXiang Education Holding Co. Ltd. is a company based in China that focuses on providing private primary and secondary education services. The company stands out for its unique offerings, which go beyond just standard PRC curriculum programs. They emphasize specialized programs in arts, sports, calligraphy, and small class education, which sets them apart in a competitive market. On top of that, LiXiang collaborates with others to offer high school education services, and it plays a key role in student admissions and progression. Now, let's talk about what's going on with the stock. Today, LiXiang Education stock jumped a whopping 32%. That's a pretty significant move, and naturally it's got investors' attention. A rise like this typically signals something positive in the market. Maybe some new development, announcement, or earnings result that's caught the eye of investors. While the exact reason behind the jump isn't clear right off the bat, it's possible that this could be related to positive news or performance around their educational services or potential expansion. Education stocks, particularly in China, can be pretty volatile, so it might be a sign that investors are feeling optimistic about the company's growth prospects, especially with its diverse and specialized curriculum offerings. Overall, this 32% jump could mean good things for LiXiang in the short term. The key thing to watch moving forward will be whether the company can maintain this momentum. If their growth continues, especially with the unique blend of educational services they offer, they could become a solid player in the Chinese education sector. However, like any stock that jumps quickly, it's always wise to stay cautious and keep an eye on future developments to see if this rise is sustainable. Our review on OCG. Oriental Culture Holding Ltd is an online platform that connects collectors, artists, and art dealers, providing a space for them to buy, sell, and trade collectibles and artwork. The company's services go beyond just offering a marketplace. They also provide educational resources for art investment, market information, real-time customer support, and even warehousing for artworks. They also help other e-commerce platforms with industry solutions, software products, and technical support, making them a key player in the art trade space. Now, let's talk about what's going on with the stock today. It's up 30%. That's a pretty eye-catching move for a company in the collectibles and art sector. While we don't have all the details on why exactly the stock is soaring, this kind of jump often signals something positive. It could be related to new developments in the business, a surge in interest around art collectibles, or maybe some strategic partnership that's sparked investor enthusiasm. Given the niche nature of the business, investors could be seeing potential in Oriental Culture's ability to tap into the growing global interest in art as both a collectible and an investment. E-commerce platforms in specialized sectors like art can see big payoffs, especially if they can build a strong community of buyers and sellers. With their range of services from educational resources to warehousing, Oriental Culture seems well-positioned to attract both serious investors and casual collectors. The 30% jump could be a sign that investors are warming up to the company's future potential, and if they continue to capitalize on the growing market for art trading, we could see more upside in the stock. But as always, with big moves like this, it's important to watch how things develop in the coming days to see if this growth is sustainable or if it's a temporary spike. Our review on JNVR, Janover Inc, is all about connecting borrowers and lenders in the commercial real estate world through its AI-powered platform. They've got a solid mix of services for everyone from small business owners to property developers, offering both debt financing options and subscription-based software for real estate professionals. Today, their stock is up 19%, likely reacting to their latest annual report. They reported $2.1 million in revenue for 2024, up 5% from last year, with a big boost in subscription revenue from their software tools. While their legacy debt business saw a decline, the jump in recurring subscription income is a promising shift for the company's future. Operating expenses went down and losses narrowed, which is definitely a positive sign, though they're still in the red with a $2.7 million net loss. What's interesting is their focus on growing annual recurring revenue, ARR, which shot up 194%, showing that their SaaS strategy is picking up steam. They also did a 1-for-8 reverse stock split late last year to stay in compliance with Nasdaq's rules, and they've got enough cash to keep going for at least another year. Investors seem optimistic about their shift to more predictable revenue, but as always, risks from the commercial real estate market and the economy remain. Still, this 19% boost today could signal that Janover's on the right track. Our review on NCNA, NuCana plc, a UK-based biopharma company, is working on some pretty innovative cancer treatments using its ProTide technology. They've got a few promising candidates in their pipeline, like NuC 3373, which is a next-gen version of the common chemo drug 5-FU, and NuC 7738, which is in trials for advanced solid tumors. Today, their stock is up 19%, which suggests investors are pretty excited about what's happening with these drugs. Even though they're still in the early phases of clinical trials, the buzz around their new approach to treatment seems to be growing. The fact that NuC 3373 is being tested for advanced colorectal cancer is a big deal and could be driving some of that optimism. So, while biotech stocks always come with risks, today's jump shows investors are hopeful about what's ahead for NuCana. There's clearly some positive energy around their pipeline, and it'll be interesting to see how things unfold as their trials progress. Our review on ONEG, OneConstruction Group Ltd, a company that's all about supplying, cutting, welding, and assembling steel for large-scale construction projects, has seen its stock rise by 19% today, and it's definitely catching attention. They focus on structural steel, like frames and trusses, which are crucial in everything from buildings to bridges. This boost in their stock price likely signals growing confidence in their business outlook. With construction and infrastructure booming, steel remains a cornerstone of these industries, and OneConstruction is in a prime spot to take advantage of this. If they continue securing contracts, managing costs effectively, and keeping projects on track, the company could really benefit from these favorable market conditions. Of course, there are always risks involved, like fluctuations in steel prices or the possibility of delays in major projects. But for today, investors are clearly seeing upside potential, believing OneConstruction's position in a high-demand industry bodes well for the future. The 19% jump reflects a lot of optimism around the company's ability to capitalize on growing construction needs. Our review on CTXR. Citius Pharmaceuticals Incorporated is a biopharma company that's making waves with its cutting-edge treatments, especially in critical care areas like oncology and stem cell therapy. Their focus on developing first-in-class therapies has earned attention, with FDA-approved products like LiXiang for treating cutaneous T-cell lymphoma and others like Mino-Lok, which targets catheter-related bloodstream infections. But today, investors are buzzing because the stock is up 19%, and there's a lot to unpack about what's fueling that surge. It could be a number of factors, but given Citius's strong pipeline of innovative treatments like Mino-Lok and the ongoing work with stem cell therapies, it looks like investors are getting excited about the company's potential to address serious health issues. Plus, with products that cater to high-demand areas like cancer care and acute respiratory conditions, there's a lot of room for growth. There's no denying the risks in the biopharma space, especially with products still in the pipeline. But with the momentum behind treatments like LiXiang and ongoing clinical trials, Citius is showing that it's got a solid track record. The 19% jump today reflects the market's optimism about its future, and it seems like investors are betting on Citius continuing to deliver on these high-potential therapies.